Good afternoon and welcome to the market close for September 18th, 2024. Holy banana bread. We finally got our first rate cut in the US and it was a nice one. It was absolutely a nice one. 50 basis points. What can I say? That's just incredible. So, of course, we're going to look and see how the market has reacted to this. We'll look at the market overall. We got a lot of stuff to cover today. Also, today is the 10 years of Wealthsimple. Wealthsimple has been with us now for 10 years, and they are, after 10 years of being in operation, they're reporting profitability, which is really, really good. So Wealthsimple looking strong, looking like they're all ready for a second 10 years. So that's going to be kind of fantastic. All right, let me get to the right screen so we can get over here. We can check out, we can check out the market. So the TSX is currently in the red. I thought we were in the green most of the day. And even after the initial rate cut announcement, we were still in the green. But we got really close to flat. We got really close to zero. And then Jay Powell started talking and we kind of fell down a little bit. So we are now in the red. I know the thumbnail was in the green, but I've changed everything else over to the red. Maybe I'll change that thumbnail later at the end of the show. We have 15 minutes left. Maybe a miracle can happen and we can get back into the green. So we'll definitely have to see. So looking at the charts, as you can see, the TSX, like, look at it, was way up here. It was really doing good. And now it's still falling. It's down here on this nice long red candle. These are 1 hour candles, by the way. S&P 500, let's head over here. Kind of the same thing. Well, the S&P 500 struggled a bit more today than the TSX did. But now it is falling. It's falling. We're in nice red territory, down 0.21%. The NASDAQ is actually doing okay. They're just above water there in the green. After the NASDAQ, well, yeah, we got red all the way down. So the Dow Jones down 0.24%. Gold down 0.67%. Silver down 2.86%. WTI down 1.27%. Bitcoin just turned me into a liar by flipping green as it's at 0.04%. And Ethereum down 1.04%. Heading over to the heat map. Well, as you can see, fair amount of red. We got a little bit. We got some good stuff in here. Like, look, we got Bell down here. Bell is doing good. Up 3.14. Now, of course, in the news today, Bell, they sold some of the sporting stuff that they owned over there to Rogers. So that might be part of the reason that both Bell is doing good and Rogers is up a bit too, 1.27%. Most of the, there we go. Let's get everything back in onto the screen. Most of the banks, they're either doing good or they're not that bad off. Well, except for BMO. BMO is always kind of in the dumper lately. They're down 1.04%. But Royal Bank is up 0.02%. Everybody else seems to be down just a tiny bit. There's not a lot of winners to really brag about on the Canadian side. Alimentation Couche-Tard, they're up 0.23%. So that's not too shabby. Looking at the ETFs, pretty much the same kind of dog's breakfast type day. Everything down just a little bit. And over in the US, Well, gosh. I was hoping that it was Nvidia that was helping to carry up the Nasdaq, but it appears it was Apple. Apple up 0.166%. Um, Google's up a little bit. Microsoft's down. Meta's up a little bit. Yeah, not a lot of greatness on the U.S. side either. It's just not looking great. So it looks like they're not happy. It looks like the market's just not happy, which is kind of weird because going into the rate cut today in the U.S., the odds got to a point where it was about 62% chance of a 50 basis points, and that's what we got. So that was kind of what people were expecting. So sometimes it's kind of weird. Sometimes with investors, you can give them what they expect, and then they're like, we're just not happy. We're just not happy. And this is kind of that thing that's happening today. Now, they have indicated that there's probably, by the end of the year, they're probably going to be cutting another 50 basis points. So probably two separate cuts of 25. So that's not too shabby. That's not too shabby. It's good to see this. Now, this will, of course, be good for those U.S. REITs. So you got to like that. You got to like that. Especially where Canadian REITs are doing so well. Let's pump up the volume on the U.S. REIT side. That'll certainly help an ETF like RMAX. So I'm kind of looking forward to seeing the knockdown effects on this as we get there. Now, there were, of course, people that thought they should go slower. They should go slower. Take their time. Don't just ease into the rate cuts. But the other thing is that by them going a little bit stronger, it could be an indication that they're looking out and they're saying, okay, with our job numbers getting bad, we want to cut off any possibility of a recession right away. Let's get aggressive. So that's kind of a subtle thing that may be going on here as well. So we'll have to see. Looking over to cryptocurrency. Oh, there we go. Now it's fallen again. 0.04 for Bitcoin. A lot of red in the market. Solana's down 0.135. There is, of course, so many coins. There's more than 14,000 different altcoins out there. These are all coins that I have no idea what they are. It is a red day. So let's pick here's this tiny little green coin here. Let's pick it. Let's see what we get. We got the P network. The P network. They at one point they were up at 22 cents. Now they're down at a quarter of a penny. Doesn't look good. This is flat. Like, it's like you could test levels out on this to make sure to calibrate them. That's what you could use their line for. So they're, once again, their coin. I'm never going to own P network. Hopefully you guys don't invest in P network either. I don't even know what they do. And if you know, you can certainly throw it in the comments, but no idea. It's just, once again, in the world of crap coins, this is one of 14,000 stories. Ooh, I got to remember to say that again because that was kind of cool. All right. Let's get back to the chat. We still got about 8 minutes. Well, almost closer to 7 for the bell. All right. Give me a moment here. Just going to lower that down a little bit. All right. So Mario is the first in the house. And it's with an I'm ready now. And we got Vic. Ooh, Vic, you actually found a parking spot. Like button obliterated. Let's go. Yeah, absolutely. I'm just really impressed you found a parking spot. Mario says, I picked up some ATD after a good month. There we go. ATD, I do love that stock. Just be a little wary and pay attention what's happening though with that bid for 7-Eleven. If it looks like that's going through, you may want to take some action there. You may. It's up to you. Mary's in the house saying hi everyone, and that also means I should take a sip of coffee, and you guys should hit that like button. Here we go. Oh, very good, very good. Oh, it reminds me. This is hilarious. So the last video, the video that came out today, I filmed it, and it sits on my desk, right? And then I pull up the raw footage, and I do the edit, and that's what you guys get to see. Well, when I was uploading it, now normally the finished product sits in my fits on my desktop while the raw material is in downloads. I didn't realize I was in downloads when I was uploading it. I accidentally uploaded the raw material. So a few people got to see it. They probably sat in there looking down, well, a few channel members. They were sort of, watching me do this, because what'll happen is I might start it and say, say whatever my opening is, and then I don't like it, so I say it again. And sometimes I might say something 3-4 times if I really don't like it until I get one I like. Then, so yeah, that the people, the poor channel members who watched that, they got that, and they got none of the background stuff, none of the words, none of the anything. They may have had me yell at the cat once, or they probably. Oh, this is great. I think, and I'm not 100% sure, but I think I actually started that one by just making sounds to get my voice all fluent. So I think I was going la 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 or something like that at the beginning. But yeah, so though the few channel members that did get a chance to see that before I pulled it down and put the right one up, you now know what a mess that all is. That I got to pull it together and pump out a video, all of the editing work that goes into it. So you definitely got a treat with that. Mario says, I see there was a rate cut in the US. Yes, a whole 50 basis points. So that's not too shabby. Not too shabby. And CC saying 50 was too much for the first rate cut. Yeah. There's a lot of people who do believe that. But I also think if they're sort of worried, and they're not going to admit it. No one's going to admit it. If they're worried of a recession, that would definitely motivate them to come out strong initially, just to get something there to try to pull back so that they have a soft landing opposed to a recession. A recession wouldn't be good. Trust me. We don't want a recession. Jonathan says, I'm here. Don't fear. Let's have beer. Oh, let's have beer. Okay. Absolutely. Good to see you, Jonathan. You made it before the bell, so I'm always impressed. Kevin Cass says, yay, I made one. Afternoon, gang. And Steve says, I was wrong. Thought it would be a 25 cut. I was going back and forth. And interestingly enough, after the CPI and PPI of last week, I was really starting to think, and even the odds makers thought it was going to be a 25 at that point. But then as we got closer, they changed their mind. They decided 50, and I was just like, I don't know, but it happened. So 50 basis points off the interest rates down in the United States. Some people, actually, some of the smaller banks will probably really like that. So we'll have to see. Funny Books is in the house with a hi all. All right. Chad says took a position in BN today. So Brookfield Corporation. Yeah, it's actually interesting. When I recently did that deep dive on Brookfield Corporation, I didn't think they were going to have a bigger total return than Brookfield Asset Management, but they did. So every so often, it's nice. Every so often, I still get surprised by something. And that was one thing that did surprise me. So I definitely like it. Roku says, do I smell a year-end blooper reel in the works? That's a good question. I haven't really been sort of putting bloopers aside. Every so often I throw a blooper at the end of a video, but nobody ever says anything. It's like nobody says, haha, that was funny. So I it's like one of those things. It's like, if you guys want to see bloopers, I will maybe save a couple good bloopers. But I'm always worried, not that I'm worried. I'm always worried that if I don't want to get to a point where I make mistakes on purpose just so that I have something for the blooper reel. That to me would be that wouldn't be fun. That wouldn't be fun at all. And Chad also believes that 50 points were too much. So yeah, it's a big start. It is a big start. And especially where they've indicated they're going to do another 50. So basically 225s before the end of the year. So that'll be 1 full point gone by the end of 2024. I think, though, at that point, they might actually sit back and sort of say, yeah, let's wait and see. Let's let this filter into the system and see what's happening. So that's kind of an interesting thing. We have about 30 seconds left. Let's see, bloopers and false. And I've done a couple of false endings. I have a couple of times I have gone past, the last little part where the music is there. I've stuck around for like, and usually I'm like, what are you still doing here type thing. And I have done that a couple of times just because I don't know. When I was filming, I just thought, oh, let's do that. I thought that would be kind of funny. So it has happened. Uh-oh. We're there, guys. We're there. And the market is closed. The bell is done. Oh, yeah. By the way, if you guys want a market close for Friday, I'll open it up for the supers. So we'll definitely do that. So 4 supers, we'll get a market close on Friday. If you guys want one, it's okay with me. Either way, all right. I was going to say, we'll take our final. Well, let's go in. I want to kind of look at the market. We can always come back, circle back, because as you guys know, for some reason, my system it delays the Nasdaq by 15 minutes. But all right. Let's go back and we'll see. Oh, yeah, we did finish in the red right across the board. So look at this. We have, all right, we got the TSX finishing down 0.36%. Get back over to the TSX. So, yeah, not a good finish, not a good finish. S&P 500 down 0.29%. NASDAQ, they didn't hold on. They fell down to 0.2. Well, they're at 0.26 right now. They could still rebound because they have 15 minutes left. They're closed, but they have 15 minutes. Now, somebody who has another screener, you might be able to look and find out exactly where they are right now. But for now, it gives us an excuse to come back in 15 minutes and just look at the NASDAQ. Dow Jones ended up 0.25% down. Gold down 0.71. Silver down 2.62. So those of you who are looking to get some more silver, maybe a good day for you. Oil's down 1.34, and Bitcoin has fallen back down 0.76. Ethereum down 1.20. Fun. All right. Over on the heat map, once again, not a lot to talk about here, really. We got a lot of red. Railroads are both in the red. Let's actually see. Let's actually remove the losers. Take a look and see. Here we go. Here are the winners. So we got some winners in here. Of course, both Rogers and Bell doing good. Let's see. Toy. Oh, what's this? Bosch. So Bosch is up 11.78%. That's not too shabby. That's a nice little movement on them today. What is this? Spin. This is that Spin company, I think. Toy. Will you let? It's not letting me into Toy. I do not. Oh, here it is. Spin Master. They had a nice little bump at today as well. But keep in mind, when you see a bump like this after a big fall like that, part of that bump is probably a correction to the upside for that fall that they've had. So it's always hard to say. But when you see a company that's moving along just normally, and then they have a big jump up, those are the ones that really, really impress me. But yeah, that's an interesting market. Over. All right, ETFs, as we said, we're going to leave them. There's nothing exciting going on here. On the US side, once again, we got a few things. Apple's doing good. Now, Apple released their so they did their big presentation and released their iPhones this week. So the iPhone 16s. There's some pretty cool things on here. Let me show you something. I can't actually show you, but I'm going to show you this widget right now. So right now, you'll see it says phone in use because right now I'm using the phone because it's acting as the webcam for this broadcast. But when it's not, I can pull my phone up in this widget here. and I can use it exactly like I use my phone. So this is something brand new that came out in the new OS, because whenever they release the phone, they usually almost always release a new OS, and so that's kind of one of the things that came out, and it's kind of cool. So I do like it. One of the things where it's really, really convenient, because I don't know about you guys, but sometimes I have apps that pretty much I have to use on the phone. And, sometimes I hate typing with my fingers because now I can just use this and I can use the keyboard. And that's just really, really, really cool. So that's kind of that new little thing that came out of that Apple presentation. So let me get rid of the iPhone. All right. So yeah, Apple had a good, and we'll pull them up here for a second. Yeah, they've actually had not a bad week. I mean, other than they had a little beep there, but definitely a strong week for Apple. Not too shabby, if you ask me. All right. Did anybody else? We did it for we did it for Canada. Let's just take a gander here. Let's grab the big winners. So of course, Apple, GE's looking pretty good. Dash is up to 2.0. So take a look here. So this is your DoorDash, which is fun. All right, we got a few things. We definitely have a few things here. That's kind of where things are going. And crypto look at this. Bitcoin back in the red. Everything in the red crypto-wise. Not fun, but it's kind of interesting. Nonetheless, that's what's going on in the market. So let's see. Give me 1 second here. There was one thing. All right. So Air Canada. Wanted to take a look at them for a moment because if you guys remember, they almost had a strike on the weekend and it got averted. So let's see how they've done this week. All right. So let's this is nice. They're up. Look, they're way up above 16. That's not too shabby at all. So let's just come back. I'm just going to do the last year for them right now. So this here is strike over, bang. Not too bad. So right now, and I'm buying them in the challenge. So I buy them each month. I'll buy them when they're under 16. Now I did pick up 5 this month. So if they stay above 16, then I'll be sitting on what I have now because I plan to sell at 20, but I have faith in Air Canada that they will fall again. I have lots of faith that they will keep moving up and down. So, I will have more opportunity to get more Air Canada as we go along. So that's not too shabby. Now, we're in here. So we have to go to RMAX. Oh boy. So they're sitting at 1875 right now. So that's not too shabby. I know they were up around 18. I think they're up around 1885. Yeah, right here, 1887. They've come down a little bit, but the rate cuts today in the States are going to help them. And as we continue rate cutting in Canada, that is going to help them big time too. I'm still very excited. And when you look at you look at their travel, and this is, they've been, June 20th, $16 all the way up to 1875. I will not be surprised to see them breaking that 19. How fast? Gosh knows. Who knows? But I wouldn't be surprised if in October we're up in the 19. So that's going to be kind of cool with this one as it keeps going. And this one gives you a nice dividend too, because it is covered calls. So it gives a 8.677% dividend yield. So that is not too shabby. Whew. I gotta love it. All right. There we go. Now, oops, I'm gonna bring up Discord again. So our good old Discord, coming up this week, we do have tomorrow night the channel members exclusive live stream. So if you're a channel member, you want to vote. And I'll tell you why you want to vote. Just give me 1 second. I'm going to show you exactly why you want to vote. I'm just going to refresh this just to make sure the data is correct. All right, because right now, here's the vote that's going second, because I'm going over to where you guys would end up having to watch Infinite Me's, which is never fun. All right, give me 1 second here. All right, so we need a tiebreaker, and I'm going to call on somebody to do that. And I'll tell you who I'm going to call on right now. Let's see here. Oh, damn, I'm getting an error. Okay, well, I'm going to call on one of you. I was trying to get this thing to go, and it's just crashed on me. So I'm like, I don't have time to troubleshoot that. All right, we'll leave it at that for now. But yeah, get over there, vote. Let's get a killer cut winner. Chad says me. All right. Oh, did Chad go and vote? Now I have to find out. I have to know. Just give me a second here. Inbox. That's not what I'm looking for. All right. The channel dashboard. Well, we'll bring it up here. There we go. Oops, it did not come up. There we go. Now it did. All right, I'm going to refresh this because I think Chad voted, and we still have a tie. Yeah, what can I say? You think actually, Chad, 2 people voted, and you voted for each of them. So we just took the tie and pushed it into a deeper tie. Oh boy. What can we say? Mario says, it's funny book, our paid video on HBA. Yeah, that was a good video. I enjoyed that. I'm looking forward to seeing what gets thrown at me next month. That's going to be fun. And it's actually not that far away. We're 18th of September. So we've only got 2 days left of fall, which is amazing right there. Although I don't know about you guys, but the friggin' weather here, we got 20s. We're in the 20s for as far as we can go. So it's like, I'm not sure when we're going to get fall temperatures. But I will tell you, one of the problems is if the heat sticks around for too long, it tends to makes it much more difficult to get the really nice fall colors, because instead of going to the yellows and the reds, you end up going to the brown. So it doesn't go over well when that happens. So just something to think about. All right. Now, there was something else. Let's I'm gonna pull this back. So we had, of course, by-elections on Monday. So we haven't yet talked about that. So we had 2 elections up for grabs. One, of course, in Montreal. Now, Montreal was a Liberal stronghold. So this is the one we're going to focus on more than the other one. But it was a Liberal stronghold. The Liberals have held it since a very long time. And it's one of these ones that they should not lose. But they did. Not by a lot, but the Bloc Québécois came in and beat them. So once again, another Liberal stronghold has fallen. So this is definitely going to send some vibrations into the Liberal Party, as more and more people will start getting behind it's time for Trudeau to step down. And I think, and I've seen so many newscasters where they've been using words like Trudeau is poison to the Liberal Party. I agree. I agree. I don't know if I'd call him poison, but I think right now it's hard to run a campaign, even a by-election, with Trudeau still attached, because people are not voting for the candidate really. In a sense, some people, I will bet a lot of voters for the Bloc that time around, they weren't voting for the Bloc. They were voting to not vote for Trudeau per se, even though Trudeau's name's not on the ballot. And they were smart in that the campaign, the candidate did not have Trudeau on any of the signs. But as long as he's in the party, I think they're going to struggle. I think that's going to really, really hurt them. And here's the thing. They need to get rid of him sooner than later, because you need some time for him to no longer sort of percolate amongst the party. Get a fresh face in there. I still don't think they'll win the next election, even if they do that. But it could give them a chance to maintain official opposition status. Otherwise, right now it's kind of interesting. We got a couple of things, couple of scenarios. So one, of course, with the NDP distancing themselves from the Liberals, one of the reasons that they want to do that is they kind of want to get some votes. And they don't want to get pulled down by that sinking ship that is Trudeau. Is it, is it too late? That's kind of a question you might ask. Now, if they were to have a vote of non-confidence sooner than later, it could be. It could be. Now, I know Poilievre has been going on about Singh's pension. So one of the reasons they think that the NDP won't cause a vote of non-confidence or won't vote for one is that he gets his pension at, I think it's February. I think in February he becomes eligible. So he definitely probably doesn't want an election before then, because if the Trudeau show pulls down Singh and all of a sudden he no longer has a seat, there's that pension gone. So, he probably wants, and keep in mind, it's not a small pension. Like what Singh is scheduled to get in February is a roughly $66,000 a year. Now, not immediately, but once he hits 65. So, that's kind of how that pension works. You don't get it like the second you're no longer an MP. You get it when you turn 65. So, but that's the pension that, that's the difference between having an election now or having an election after February. So, and I strongly believe that we are looking at a spring election. Mario says, Chad, you voted on both videos. How do I get to vote? Well, Mario, you got to be a channel member, right? Because it's actually the channel members who vote. That's kind of why. But I mean, if you want to become a channel member, down at the bottom of the chat, there's this little dollar thingy there. You click on that, or I think there's even a join right next to the where it shows how many subs or whatever. You just click on that. It's about the cost of a cup of coffee. Then you can go in and vote. So that's always fun. Jonathan says, changed my vote for the good of the channel. Oh, did you really? Let's take a look. Gotta love it for Jonathan here. All right. So let's see here. There we go. Now it's, oh boy, that really moved quite a bit. Stocks, selling stocks, rebalancing, bailing on bad stocks. That is now leading. So we'll have to see. Of course, knowing my luck, because I'll basically end this tomorrow morning. Well, I don't end it. It still goes. People can vote. Like I've seen a few times where when I make the video, whatever option wins, there's been at least once where afterwards votes came in after the video was already made and a different option won based on that. But obviously, once I start making the video, it's like, that's where we're at. Yesterday, says we 100% want him to run again. Will get the Liberals out of there. Well, I think you're okay with that. Yesterday, I think they're out of there no matter what. It really boils down, and I guess I was talking about the who's going to be the opposition. That'll be interesting because, I think if the Liberals still have Trudeau, I don't think they'll do it. I think they'll really, really crash. Now, in that case, we have, of course, when we talked about the NDP, if they can distance themselves enough from Trudeau, maybe, but it could also be another one of those years where, it's happened once before where the Bloc became the official opposition. So that that could happen again. It's going to be really, really, really interesting to sort of see how it all ends up. So I'm pretty excited, pretty excited. So we'll see, we'll see. You know, it's only a year away at the latest, and if it does happen in the spring, well, fantastic. That'll be a great beginning to 2025 to see what's going to go on there. All right, King of Day is in the house with a hello there, Candace. It's always good to see you, King of Day. Oh, I also forgot we were going to take a quick gander back here. There we go. Now the NASDAQ is closed, and it did finish in the red. So down 0.45. Now you notice this little circle here. That's actually it means something. You'll figure it out after the next video comes out. This is just small part of a picture that's in that video. So just in case you're curious to wonder why I have a circle around this little low here. So there's a reason behind it, for sure. All right, let's go back to big screen. Missy says, market dropping today makes no sense. It doesn't make sense, and it does make sense. It's kind of interesting. So if you look at the mindset of voters, we got a couple of things going on. First of all, there were a lot of them that wanted the 25. They're like, okay, let's ease into this. Let's just go slow. We'll be happy. But it didn't. It didn't happen. So as a result, we ended up going to the 25. And some of those people who are like, they're cutting too fast. They're making a mistake. This is not good. Well, then there are the people who are like, okay, yeah, we kind of needed a 20. We needed a 50. 50 is good. And there's and those people are happy. But at the same time, this is the other thing going on where a lot of people are thinking, okay, why would they come out so aggressively right out of the gate? And when you think about the job numbers and the jobs coming down, that leads us to the thought that, are they trying to stymie off a recession? Are they sort of thinking, and even in the interview with Powell said, the time to do this is when, the market's still strong. It's too late once everything is already, once unemployment's gotten out of control and things have fallen. So he's kind of he didn't verify that they're stymieing off a recession, but he did verify that, they're coming in strong just to try to improve things a little bit and try to prevent things from, deteriorating any further. So I do think I understand both moves. I understand, I know a lot of people who are thinking 25 should have been where we started. Yes, but if they really are fearing a recession and they don't want to go into it, then the 50 makes perfect sense. But that's the thing. Because there's any amount of, right now, we're in this world where any amount of uncertainty tends to result in the market going crazy. And that's what we saw today. Initially, and it was kind of interesting. Initially, when they released the numbers, the market went green. The market looked good. It looked like everybody was, everybody was like, okay, yeah, this is looking good. And it was just basically once the interview came, then things started slowing down, pulling back, and then we drifted back down into the red. So never a good thing. Never a good thing. But what can we do? What can we do? As investors, if you're a long-term investor, fine. It's okay. If something falls in the red, maybe it gives you an opportunity to buy something at a cheap price. But yeah, it's kind of an interesting day for sure. King of Day says, I've been away for a bit. Happy belated birthday. Oh, thank you. Thank you. So yeah, my birthday, by the way, it was last Friday. So we're a little bit further away now. So we can look forward to it again next year. And anyway, also, guys, anytime it's your birthday, feel free to throw it in the chat so everybody can wish you a happy birthday if you want them to. Now, there are people who are like, I don't want people to know, because, some people will get a little blushy and things like that if people start asking or start wishing them happy birthday, but I'm okay with it. Let's see. Missy says, going to look at RMAX again. I'm just not sure if rear industrial renters are good with a struggling economy. You have to sort of look at the big picture. So when you're looking at RMAX, Yes, there are all kinds of different REITs that are involved, but that's good. That gives some stability going across the sectors. What is going to be good is, especially on the Canadian side, the rate cuts, fantastic. It's going to help. It's going to help them finance expanding. It's going to help them just drop their overall servicing on those mortgages, which is really, really good. So all of that is fantastic. And we've already seen it beginning to happen. And it is also another thing, and it's not just that. There is another aspect to it as well. So as interest rates come down, yields on new bonds, they start coming down too. So a lot of different fixed income sources all of a sudden are not making as much money as what REITs are. And REITs start to look a lot more appetizing for people looking for that safe income when it comes to stuff like that. So as a result, I got there was an accident just before the show started, and one of the Lego pieces fell, and there was a bunch of Lego under my feet. So I was like, I don't have time to pick it up. In case you hear that noise, I don't know if the mic will pick that up or not. But going back to the REITs, in the REITs, they just start to make a lot more sense. And even when we're in, once we're finished the rate cuts, at that point, they're still going to be good investments. They just won't be super good. So they'll go from super good to good. But once the economy, not even the economy, once the market goes back into a bear market, well, yeah, they'll start to go down again. And at that point, that's where, and this is the smart thing. Like, you can still hold on to a REITs if you want to, because if you're holding them long term, they're going to go down, they're going to go up. That's normal. But, if you're like me and you sort of trade things a little bit more like, with what's going on, yeah, I will probably move out of REITs. I probably would estimate towards the end of 2025, depending on what they're doing. I'll pay attention. So they'll go from I'm really bullish on them to I need to watch what they're doing and pay attention. So that way I have that opportunity to get out in case things get worse. But normally, provided we don't go back into a rate hiking scenario, they should be fine. It's normally that's when they will really go down, is when the rate hikes begin. So they went down a little bit for the bear market, and that's fine. Everything kind of goes down in a bear market. But then we had the massive rate hikes, and that just kept them going. So it was almost like the bear market never ended. And now we're coming out of that. So we got all of that recovery ahead of us. And that's going to be really, really good for REITs. So definitely, when you're doing your due diligence, don't forget to look at the REITs. You'll probably be very grateful to have had some in. But just keep in mind that, things will change on the other end. CC says, great all angles summary. Yeah, absolutely. I always try to come in from all perspectives to the best of my ability, because I've always believed this. So when it comes to any topic, you'll get two sides. You'll always have two sides usually. And a lot of times those two sides, they're like, no, it's this way. It's either A or B. Well, I like to sit around C. That way I can try to figure out what's happening at A, what's happening at B. And because normally both sides are right, both sides are wrong. Somewhere's in the middle is where the kind of I guess the interpretation falls. And I find that to be a very powerful place to be able to do that. So I definitely love that. Let's see. Vic says, in Candace we trust. There we go. We need to print that on the money. There, let's print that on the money. Jonathan says, don't step on the Lego. Oh, I know. I mean, Lego's pretty indestructible, but my foot's not. My foot is absolutely not. Bill says, no matter how bad the economy is, you still have to pay your rent. REITs will be fine. Yeah, absolutely. Absolutely. Like I said, if we get into a situation where interest rates start going back up again, that's when REITs are going to suffer But until that happens, I think REITs are going to be fine. And even when I said I'm going to reevaluate, it doesn't necessarily mean I'm getting out of REITs completely at that point. It just means I'm going to look and see, are there other sectors that perhaps I can make more money on? Now, the one that I probably will get out at that point is probably RMAX. I'll probably get out of them at that point, but my individual REITs, I'll probably hold them. Or any of my real estate related. So, for example, mortgage investment companies, they're kind of in that same boat. All right. Torin says, wise words and on point. CEO from Italy, amazing channel. Thank you. Thank you. You may be the first person in chat to say that they're from Italy. So that's pretty darn cool. I like it. I like it. All right, guys. I'm going to have a sip of coffee. So if you have not yet hit that like button, be sure to do it, because that sort of helps that algorithm get this out to new folks, people like Torin. That's how they find the channel. So definitely hit that like button. Oh boy, that's really, really good. I love it. I love it. All right. Mario says, I sold more REITs at a 1-year high. No, here's the thing with profits. It never does hurt to take a profit. But I will say that right now with REITs, we may be at some highs, but they're going to go higher. So, let's just take a look. Let's just, you know what? We'll go to, how about we go to RioCan? All right. So REI. All right. Let's take a look at RioCan. We'll also take a look at, I also want to look at AP, because, I had pitched AP for a while back, and I think they've been doing really good as well. All right, so we're going to put this on. Let's just go with the last year. So here's RioCan, and you can see they were still struggling. So these were rate hikes, and then it leveled off, and they were still falling. But right here, June, that's when the rate cuts began. And look at this. Bang, bang, bang. They're sitting right now at 2041. They went up to 26, but they're going to continue to go up. So RioCan, definitely a good one. Definitely a good one. All right. And we get ourselves a super sticker. You know what that means? You know what that means? That means that Mary is she's the GOAT. She's the GOAT. So Mary is officially the GOAT. And that also puts us one super closer to a Friday market close. So 3 more, and we're doing that stream. Keep in mind, there is a stream tomorrow night for the channel members as well. I cannot wait for that one. All right. Now, I did mention AP. So let's go to AP. So this here is Allied Properties REIT. Now, this one's fantastic. Let's just take a look at the last year. And you can see, once again, once we get down here to June, then it starts picking up. So it's gone from 1539 at its low up to 1914. So they're doing good. They're all moving up. And this is the thing, though. A lot of times, if somebody doesn't understand what's happening in the market, they may look at this and say, oh, well, look, this is all crap. This is crap. Oh, sure, they're booping up at the end, but look at all of this. Why would I even touch this? Well, it's because they don't understand what's happening. They won't understand the interest rates. And this is the important part right in here, because, this is in a different economic environment. This is a rate. Well, first of all, bear market, rate hikes. Now things are recovering. So it's definitely looking good. All right. Mario says, Italy is in the house. Yes, absolutely. Mario says, I sold my GRT.UN. So, well, let's take a look. Another REIT. Why not? We could make this a REIT stream. So this is Granite Real Estate Investment Trust. All right. Let's go to that 1 year. And once again, you can see right here, you can tell. You can tell where it changes. That's June. That's June. It's simple as that. And in this case here, they've gone from $65 to $81. Holy banana bread. That's what I say. And just as I said, holy banana bread, Oh, we got a dividend from the banana bread company. So the banana bread company, folks, well, they are now the brand new. Yep, the goat. They have taken the title away from Mary, but and that also puts us halfway to the Friday market close. I'm feeling good about it. I'm feeling good about it. Oh boy! All right, now here we go. Bill says Allied. Whoop whoop. Yeah, exactly. I know Bill's actually, I believe I have messages from Bill. I think Bill has done well with Allied on this ramp up. And it's going to continue, folks. It hasn't, we're in the beginning of this, right? We're not at the point where, we have to start worrying about it turning around. It's not there. Mario says, I'm keeping my Ryokan until it hits $29. Okay. But here's what I would say, Mario. Don't say that you're only keeping it until you hit 29. I would be like, when it hits 29, I'm going to reevaluate. If it's still going up, maybe I don't sell, maybe I just take some profits. There's always options there. Because yeah, if we're at that point that they're still rate cutting, I personally would leave it be. I personally would. Let's see. X says there is many sectors inside of REITs. Well, yeah, there's like a lot of different REITs. You got residential REITs, industrial REITs, you got healthcare REITs. So there's a lot of different REITs out there. And that's very, very cool. All right. Holy banana bread. We have a brand new, whoops, there we are. We have a brand new goat. And Mario is now the goat. So Mario took the goat from the banana bread company, who took the goat from Mary. Woo! This is like I almost feel like I'm a sports announcer telegraphing an event. It's hilarious, but I'm okay with it. I'm okay with it. But yeah, back to what X was saying. There are a lot of different sectors. And one of the things I did mention months ago was that your residential REITs, those ones were going to basically take off first. The other REITs are going to follow, no doubt about it. But residential and industrial, I thought, were also going to take off first. And we're starting to see a lot of that. Now, retail REITs are going to lag a little bit. Some of them, like for example, here's a Roku with Canadian Tire. So, and I love Canadian Tire. I mean, to me, it's a great store. I do love them. But let's take a look. So CT. CT.UN. All right, so Canadian Tire Real Estate Investment Trust. All right, and let's go back to the 1 year. So you can see right here, where it turned around in June, and they're doing they're actually doing better than I had anticipated, but I love it. I love it. If I'm going to be wrong about something, be wrong in that I underestimate, like a retail REIT. So this REIT is doing fantastic. So they're down at like $12.90. Look at that, $16.11. So that is fantastic. If you got a lot of those, Roku, congratulations. That's definitely doing good for a REIT. All right, and all right, we have a brand new. And that is Funny Books. Funny Books has come in. So Funny Books has not only capped off, taking the goat away from away from everyone else. Funny Books has also ensured that we get a market close on Friday. So we're going to be back here on Friday. We're going to do this all over again and see how this crazy week ends. We'll see how this crazy. I love it. I love it. We're going to see how the crazy week ends. Whew. All right. And poor Mario. Mario was the goat for like a couple minutes. So you don't get to be the goat for long unless you're the last goat. Then you can hold it for a while. So that's always fun. All right. Funny Book says, does it make sense to hold RMAX and individual REITs? Yeah, it's up to you. And this is the thing. They're all going to be going up. Now, I'm right now with RMAX. This is kind of what I would say. RMAX, I will probably get out of RMAX before I get out of the individual REITs because as we're going up, and let's go back to RMAX. As this really starts picking up steam, because right now we haven't seen that. We haven't seen that steam yet in RMAX. We've just seen them doing their rocket ship. So normally when you have a covered call ETF, because of the way ETFs work, and we can go to the Jamboard. We can go to the Jamboard. Ha ha ha, I love the Jamboard. All right, let me get I'm going to go with black because I think black is probably the best. So when you have a covered call REIT, so what you end up doing is you're writing options. We'll just go OPT. Why not? It is very hard to write with a mouse. I will tell you that right now. Very, very hard. But what you're doing is you're basically creating a contract. So let's say, for example, right now, they are at, and we'll put RMAX. MAX. All right, there we are. RMAX is, why the heck am I not just using the text thing? I don't know. So RMAX is currently sitting at, we're just going to say 1875. I think it's a little bit higher than that. All right, so RMAX is sitting at 1875. So what you're going to do is you'll write a contract and you'll say, you'll guarantee that you will sell so an X number of shares. So normally a basic contract would be 1,000 shares. It's usually in multiples of 1,000, but let's just say you're going to sell X number of shares for $20. And you'll have that's your strike price. So $20 is your strike price. And you'll have a date on when that becomes active. So for example, let's say that strike price is, let's just say it's October. We'll say 15th. So that's your strike price. So a couple of things will happen. So first of all, anybody who wants to buy this opportunity right here, they're going to pay you a premium. So let's just say that premium is, let's just say they're paying like $5 a share or something. We're just using this, we're just using that as a random number. But let's say they're paying you $5 a share. Well, you get that right away. That you get to keep it. No matter what happens, no matter what, you get that $5. So two things are going to happen. 1 and 2. So 1, you don't hit that price. So on October 15th, let's say you're at 19.95. Well, you didn't hit that price. So they have this option. They can still buy it. But they would be paying $20 for a 19.95 share. So they're not going to buy it. They're going to just leave it be. So you basically end up getting to creep the premium and you get to keep the share price. Whoa, that's the best case scenario for you. The other option is, let's say it just goes crazy and that, and it goes up to like $21. So, and keep in mind, this is not the price of RX. We're just using this as an example price, but this would be the price of the underlying asset. So they would have an option for each asset within it. So I'm just trying to make this nice and easy, but we'll say that it goes up to $21. Well, they have that option. So they end up buying it at $20. So they get all the shares that they purchased. You all of a sudden, basically you've only got $20. So you've lost $1 right there in, because you're going to have to buy it back at $20. Or sorry, at $21, you're going to need to buy them back for the fund. So you lost $1 of the upside. So that's kind of what we're talking about is you lose a little bit on that. And it can get dramatic depending. So when prices really explode, that's when you get hit with that strike price. You're forced to sell and you lose some of that upside potential. So all of a sudden this fund, which should have been at $21 is, well, it's not. It's only at 20. because of this option. So you lost an entire dollar in share value. Now, mind you, I'm just using easy numbers for this example. It's a lot more complicated when you're actually doing the real thing. But this is the general gist of what's happening. So you lose, and if this happens every single time, you're losing a dollar here, a dollar here, a dollar here. All of a sudden, you're not making it, you're not getting where you should have been. So for example, let me clear the frame. So let's just say, I'll use two different colors here. We'll go with red. We'll use red. So I'm going to just draw this as kind of a straight line. But if that is the share price and you're writing options on it, what ends up happening is if it's like on a trajectory like this, you may be starting off or going the same way, but then, all of a sudden, you keep hitting strike prices, and next thing you know, there's a gulf. There's a big gulf here between what you should have had and what you would have had. And that's one of the reasons that covered calls can tend to not make as much money as the actual underlying asset. Mind you, you are getting dividends, so that does help. So you are getting divs, so that helps bridge that gap a little bit. And if you reinvest, we'll put in drip here. So if you reinvest those dividends, it will also help pull that gap a little bit narrower as well. So it's just something to keep in mind. That's kind of the way it all works. So that's one of the things to keep in mind. So right now, with RMAX, and it's hard to tell because we'd have to know all of the underlying assets. But this type of movement to me indicates that they're probably not getting hit as much on that strike price as you think. So they're probably, for one, they're writing really good strike prices, like they're not undercutting their own price, which is fantastic. Because if you're writing a good strike price for that market and people are willing to buy it, that can be fantastic. So that's a sign that they're managing this pretty darn good. But that luck's not going to keep up forever, because if this accelerates, they're going to run into situations where you're going to get this separating a little bit. So it will still be going up, but perhaps not as much as it could have. So we'll have to wait and see how this looks. And I can't wait. Once we have another year of data on RMAX, oh my gosh, that'll be really cool. So, all right, let's get... All right, Roku says, been waiting a long time for Ryokan to recover. Yeah, absolutely. I remember, I know before the bear market, Ryokan used to be a favorite of so many people, and a lot of people did actually abandon Ryokan when things started going south. But those people who held on, if you're and this is the thing, if you're a long-term investor, it doesn't hurt. You can hold something like Ryokan when it goes down and when, with the troubles it has, because it's now coming all back up. That's kind of the way that market works. So it's never a bad thing. Kind of like when we look at what happened with NVIDIA at that last earnings call. It was disappointing, and we still haven't recovered from that. But, I wouldn't sell. I know it's going to come back up. It's a good company. And AI is only just beginning. So I have a lot of faith in tech, and I do have a lot of faith in AI. So I'm very confident, just waiting to see how that rolls out. But that's the thing. I always say, if you don't have to take a realized loss on something like that, absolutely don't do it. Wait it out for sure. CC says, you think the U.S. market bounce will begin in October or November this year? So what I'm thinking is we're having a bit of volatility up until this election. This election is crazy. I mean, we've had things. We've had We've had assassinations attempts. We've had stories about people eating cats and dogs. Both sides are villainizing the other side, both sides basically say the same thing, that if the other side wins, it's the end of America as we know it, type thing. It is a very crazy election, and I think that volatility, it's going to keep on going. It's going to keep on going. There's nothing we can do about it. But that doesn't necessarily mean that things have to be red. We can have a very volatile green market. And I do think we're going to see that in October. Even September. September hasn't been that bad. We started off like we were, heading to Hades or something. But, last week was great. That pretty much undid the first week. And this week, we're seeing that volatility again. But I am thinking, though, once we do get past the election, I think we'll have a pretty good end to the year. And I see tech as looking good. Now, in the video that's coming out, well, the channel members can see it tomorrow, but the next video, it's a deep dive on QQQY. And that, of course, is a tech ETF. So here's the nice thing. In it, I do have to address tech, and I have to address what's happening with the NASDAQ. And I have something in there where I'm sort of showing you something that is very bullish in the NASDAQ. So, it has to do, remember that little circle thing? You guys kind of saw a little piece of it. Has to do with that. So yeah, tune in for that. I think you guys will love it. I think you'll love it. All right. X says, love my MREL, up 20% and collecting div 7%. So yeah, MREL. I think that's Middleton. Let's see, MREL. Here we go. Or sorry, Middlefield. I knew it was middle something. So this here's a Middlefield real estate dividend ETF. All right. So this is one that didn't make it into the last video, but it could have. It came close, actually, to be honest. I don't want to look at the 3 year. Let's look at our 1 year. So you can see once again, June. And once again, it's just going crazy. Now, this one here also has a pretty good dividend, 6.682%. So that's not too shabby either. So another good ETF, ETF. So I'm just very, very excited overall about REITs. They're definitely making me happy. Bismarcky says, happy Wednesday, banana bread crew. Grant says, are we too late for the party? No. And the party can go on after the show is over, because you can always go back and catch the beginning that you missed. X says, RMAX will underperform on the way up and down. Yeah, absolutely. And that's one of the things, is that right now it's doing really well. And I think it's still going to do fantastic for a while. I do like how they manage things at Hamilton. So I am looking forward to that. But once it is up, that's where I'm looking at getting out of that one. So once we're up, I'll probably move out, but I'll tell you guys, I will let you guys know what I'm doing as I'm doing it. Because, that way there, you guys can sort of say, oh, if Candace is jumping out, maybe I should do some due diligence and see if it is time. And that makes sense. That makes sense. Ron says, if it goes to 20.02, you might still get to keep your shares. Yeah, you might. Sometimes if you are very close to the strike price, sometimes they will just opt not to, because it comes down to feasibility, right? Like if you're really, really close and they're not really going to make anything on it, they may just sort of say, it's not even worth processing. So that does happen. That does happen as well. Ron, perfect. That's absolutely true. Missy, okay, I was wondering why everyone suggests REITs along with a foundation. Yeah, no, REITs I think are fantastic. And actually a company like RioCan, to me, I would consider them to be a blue chip REIT. I would also consider them to be a foundation stock. And like any blue chip stock, it's going to go down with the market and with different environmental conditions. And that happens. That does happen. And yeah, what can I say? You just have to sort of ride things out like that. It really depends on what your motivations for investing are. If your motivation is to get in and out fast, make shorter trades, well, right now, yeah, they're still good. I think they're still good for that. But you just want to pay attention to what's happening in situations like that. If you're a long-term investor, if you're a long-term investor, you really should have been buying REITs while they were down as much as possible. Just sort of pull them up And then sit back now and watch your portfolio moving back into green. So definitely not too shabby. Patricia is in the house. Hi, Patricia. Good to see you. Since investing back in 21, I've held REI. So Ryokan, absolutely. All right. And Actaz is in the house with RS from Middlefield, pays almost 12%. Yeah, RS is another one. Now, I know that they came in, I think they came in 5th place in the last list. But, and this is, and I did mention this in the video. I want to point this out in case you missed it. As they're moving up, and they're doing fantastic, I do see this one as one that has that potential to move up faster and move up that list as we get deeper into the rate cuts. It is, it is one of the split cores that as you guys know, I normally look at split cores as being situational. So normally in good markets, I very much like them. But in not so good markets, I tend to move away from them. And that's my personal preference. However, there are a couple that I think are fine, even to hold in bad markets. RS is one of them. Also the E-split core as well. That's another one. So ENS, I tend to like both of them. But I think this is a good split core. And I think this is one of the reasons I included this in that video. Even though it wasn't technically, it isn't an ETF, but I do think it has a great potential to do really well through the rate cut period that we're about to hit. So yeah, this is another good one. Definitely another good one. Oh boy, it's time for some more coffee. All right, here we go. All right, we are coming towards the end. So if you have last minute questions, and sometimes those last minute questions can keep me going for a while. So don't worry too much. But if you got the last minute questions, throw them in. So we have another show coming up really soon, October 7th. Actually, let me pull up. We'll head over to Discord for this. Boop-a-doop-boo. Where is Discord? Here we are. Yeah, here it is. October 7th, 7 p.m. I believe it's a Monday. I actually think it's a Monday night. So we are going to do our 3-year celebration live stream. So there's no topic. We're just going to come. We're going to chill. We're going to hang. And I'm going to eat something with a teaspoon of DaBomb on it. Because you guys have been going on. A lot of people have been telling me, oh, I love that Hot Ones one. You should do it again. I'm not going to do the full Hot Ones, but we will do DaBomb one more time. That was, I'm already thinking about how painful that's going to be. So you will get to see me sweat. I might even hiccup. I don't know yet. But we are going to do that in that show. I will, of course, be answering your questions. It'll be like, after we get through the news type thing on one of the news shows. So this week, for example. So definitely tune in for that. It's gonna be fun. If you can't tune in for it, it'll be there for the replay. It'll be there for the replay. I just stepped on Lego. Oh boy, that's fun. That's fun. All right, let's see what we got here. Actez says, leave a thumbs up. Yeah, absolutely. Hit that like button, folks. It doesn't take much. Now, mind you, some people are watching this on TVs. You can still do it on a TV, but it might be a little bit more difficult. And I completely understand. Vineet is in the house with a hi all. And Jean, XUE, says, what is the difference between ENCC and ENCL? Which is better? All right, so ENCC, that one is a covered call. So it's basically an energy ETF with covered calls on it. So let's pull this up. Let's just pull it up here. We got the other screen. So ENCC. So it is your Global X Canadian Oil and Gas Equity Covered Call ETF. So they will write covered calls. I believe this one's about 30% of the fund, if I remember correctly. So they do write covered calls just like RMAX does. and they make money from the premiums to enhance what you get in your dividends. And it's a nice looking dividend. It's right now it's sitting at 14.391%. Now keep in mind, oil's down right now, so that is making this distribution, this yield, a little bit bigger. So we'll take a look here in the last year. You can sort of see oil has come down here a little bit. We are, depending on what happens in the winter, we may get a rebound as early as the winter on oil, but at least in North America, we're already expected to have warmer than normal October and November. So it's hard to say what's going to happen with the winter. So, but Europe could be different. I haven't yet looked into the long-term forecast for Europe. So hopefully if it's cold, we can get a little bit of push. And there's always OPEC. OPEC does get greedy every so often and cuts production. So that could continue to happen. So we'll see how that goes. But while oil is down, it is a good time to get in. But anyway, that's ENCC. Now, ENCL, it's pretty much the exact same thing, except for you get the covered calls and you get leverage. So they basically boil. They don't boil your leverage. They borrow. So they basically borrow, I believe it's 25%. So for example, if you buy one stock, you'll get the returns as if you had bought 1.25 stocks. And it's the same thing if things go bad. So when they fall, you also will fall 1.25% faster. But because of that, you get a bigger yield. So you're taking more risk, but you're getting a bigger yield. So 18.191%. So once again, it boils down to what it is that you want to do with this. Now, both this one and ENCC, they have that same issue with if oil were to absolutely explode, you're going to lose some of that upside potential. That's the way these work. But as long as oil's not going crazy and it's slowly moving up or moving sideways, these are fantastic. You're getting the dividends, you're getting a little bit of growth. So they are good. And they're a nice source. Now, I know a lot of people, I don't know if Nine is here today, but I know Nine has been stacking up on ENCL while oil is down. Not a bad move. Not a bad move at all. So that's the big difference between the two. Meow says sorry for the Lego. Yeah. So basically what happened here is, and let me see if I can grab a piece. Here is I probably should go large screen. This used to be part of the Millennium Falcon. You can sort of see a little bit here, but yeah, it was sitting on a shelf, and Jill was trying to, let's put this back down. Jill was trying to close the door, but it kind of snagged a bit. And so she pulled a little bit harder. The vibration went through the wall, hit the Millennium Falcon. It came down, hit the keyboard, took out the mic, took out the camera, broke into a bunch of pieces all over the floor. Yeah, so putting it back together it actually won't be fun, because when you put it together normally, you get bags of, you get about, maybe 10 to 12 bags or so of Lego, and, you work on each bag at a time. In this case here, I'm going to have the whole thing. And it's going to be it'll be a lot of fun putting it back together. Yeah, I'm not looking forward to it, but, yeah, it'll happen. Anyway, that was the story on the Lego, the fun of the Lego. Yeah, it happens. And the funny thing is, I expected to have at least one ship at one point fall over and break. And I always envisioned it as being a cat knocking it over. But, well, yeah, Meow did it. So it was like a cat. So we'll say I'm half right. I'm half right on that one. So yeah, absolutely. Whew. All right, guys. This has been another fantastic show. You guys have been awesome as usual. And we are back. We are back on Friday. Of course, thanks to Mary, the Banana Bread Company, Mario, and Funny Books. So we will be back here Friday. We'll do this all over again. We'll see what this week has to offer. And those of you who are channel members, tomorrow night, we got the channel member exclusive live stream. I think it's going to be a good one. I can't wait. Until then, everybody, take care. We'll see you again very, very soon. Oh, wait a minute. I think I got a couple people here. Yeah. Oh, a couple of thanks. Perfect. Yeah. So take care, everybody. We'll see you again soon. We'll see you either tomorrow or Friday, depending on your channel membership status. Until then, everybody, take care. Bye. I think we just had another one of them false endings. Whoops. We'll try this again. All right. Take care, everybody. Bye.